So hey everyone, how's it going? My name is Chris, Carnegie Mortgage. I'm gonna start here. This is credit to close. Some of you guys may have seen this already, but we're doing it again. So welcome. It's important for all of us to work together. But besides this, I'm gonna go off the slides a little bit, because there's nothing to do with credit. This is just collaboration, between the lender and the agent. It's very important for us to work as a team, obviously, sometimes you have situations where, the agent works with the buyer that has another, mortgage person that works at, say, a Chase or ABC Mortgage that they don't even know about, right? God forbid, you're in their beck and call in your hand and, and praying that the loan closes, right? Or praying that you call them up and they say, hey, are we all doing okay? If they answer the phone call, sometimes you don't hear anything from my understanding, correct?
Okay.
So I'm here, I'll always pick up my phone calls for any one of you guys, whether good news or bad news, you're gonna hear from me, all right? I also do house calls, but that's case by case, not everybody, some people don't, obviously, not computer literate, but I'm here to make it easier on everybody, okay? As I always tell everybody that's always stressed out, let me take on the stress and I'll take care of it at the end of the day. Guys, I call myself Mr. Make It Happen. I make it happen, at least I try to, within reason, okay? I never tell anybody no. I try to give them the option, right? I give them the option to do what they need to do. I'll follow up 3, 4, 5 times, but if they're not doing anything, there's no progress, it's all on them. Okay? So as far as programs go and pre-qualifications, everybody knows what regular qualification or approval is. Everybody knows the difference. A pre-qualification is just a credit check. All right. A pre-approval is more in depth. Okay, as far as trying to qualify them with the income, DTI, so on, and bank statements and all that stuff. I do that personally. I look at that. Sometimes I can look at the income and the credit and liabilities and just tell you right off the bat. Obviously, you're not going to qualify a person for $1 million house if they make $80,000, unless they're putting a big chunk down. Okay, the numbers don't make sense. Okay, just right off the bat, you can look at that stuff and you can go from there. Okay. Here at Carnegie, we do something that's called preferred underwrite or a home. What is it called? I'm sorry. Like a preferred. It's almost like a cash pre-approval where it goes through a full underwrite, right? And all you need is the contract at the end of the day. So you could present that to the if you have a real serious buyer, okay, and they're looking with you, they're looking to team up, and they're really serious. They're looking to have to move within 3 to 4 months, whatever it is, right? It's a cash buyer, okay. There's no mortgage until you already have the mortgage. All you need is the contract and the appraisal, okay. That's a full pre-approval real underwrite. I get that within 24 to 48 hours, depending on the borrower.
What's the turnaround to close that once you have that?
Like all we need is appraisal and title. Okay, that's it. That'd be like within 2 to 3 weeks. 2 to 3 weeks, no problem. The loan programs that we offer, all right, just like anybody else. Conventional loans through 3% down. FHA, 3.5% down. FVA, jumbo loans. All right, VA is 100% financing. They have to have all the eligibility document, the DD 213, 14. I'm sorry. And they can be active duty. If it's husband and wife, they could do it. If it's boyfriend and girlfriend, they can't do it together. They get half the benefit. They always have to, if they want to go on it together, they have to be married, or else the person that is not married, they have to put on their portion, they have to put a down payment. In that case, it doesn't really make sense.
Okay, so whatever this person qualifies for, let's say it's up to a certain amount, if you add someone else to the mortgage who's not your spouse, then they only get half of what they qualified for at that point in time?
And that person has to put down their own, their portion of that, yeah. So they have to be married, and that includes if they're buying with a parent or not. They can't do that.
Okay, so the best thing is if you can afford it yourself, just don't put that person on mortgage.
Exactly, or if you're married, you're fine.
Yeah.
Okay.
And I had a question about the conventional loans real quick. Do you have conventional ones where they don't pay MI? You know,
That's we go to non-QM.
Okay.
Non-QM. Okay, that's the way we do that. We could roll that in. We also have, we also have that 3% option as well for conventional.
Okay.
But also for conventional stuff and even FHA, so I have a scenario right now, I have numerous scenarios right now where people have gone to last 4 years in school and now they got the job, they got an offer letter, but they haven't been working, they just started. We can use the offer letter as income. Okay, for their potential income, as long as they can provide that they've been in school for the last 4 or 5 years with the transcripts, so on and so forth. With FHA is the same thing, but they're just gonna only need a pay stub.
So they have to wait for one pay stub.
Yeah.
Okay, got it.
Before we close. Again, unique investors, I've done a bunch of these, I just closed, my first one with Carnegie, yesterday, actually. It was an investor DSCR loan, okay? Debt service coverage ratio loan. Those are the easiest ones to close. But if you're gonna close an LLC like the one I had, you have to have the LLC docs up front. Or else it's gonna delay some of the stuff.
Okay, so you can't like create the LLC.
You could recreate it, but it's gonna take time. It's gonna take like an extra step. Because they want the disclosure signed for whatever reason. This was not a state one. It worked out it was pretty easy. No documentation. The thing with this stuff is whether you do the investment conventional and you do the investment DSCR, if you have decent credit, it's pretty much the same rate.
Because 15% down, is it?
15% down. Over a certain credit score.
Yeah.
If I think it's over 720 or 700, it's 15% down. If it's like a 680. Right, then you're gonna want more down, sometimes 20 to 25.
And those have to go, DSCR have to go under a business, or you can do them individually?
So you could do it both, either you have the option. Okay, but that 15% down is for a single family or condo. Multifamily is 20 to 25%. Okay.
That's even two family.
Yeah, that's a two family. You can even do 20 on a two family.
Oh, you can. Okay.
You can, but if your credit score is over 700, under 700, then you gotta do 25.
Yeah.
Okay, we could also use 1099s with this stuff. So if somebody makes $200,000 and we can use the 1099, so they take 10% off just for the taxes.
Okay, can you refinance into a DSCR?
Yeah, you can.
You can?
If it makes sense for you, yeah, you can.
What's
I've
the
done those.
interest? What's the interest rate on those?
It depends on the LTV, on the loan to value. But
And I was gonna say, like, so let's say that I owe 200 and it's worth like 500 now. Do I have to pay anything down to refinance it?
No.
Okay.
Everything's the only thing you have to pay for the appraisal.
Okay.
If you're gonna get the better rate because your LTV is low. The lower the LTV, the better the rate. So you might actually get something like probably in the high sixes.
Okay.
In that case, because your LTV is low, not depending on credit score and stuff like that. But you can't live you don't live in a property, then you're fine. You can
I
be
was talking about that, because I definitely may want to refinance when I have, just to kind of do it a different way, so.
Yeah, it's fine. So we have that. Oh, we also have, 12 months bank statement program. To have 24 months, right? So you could be, for people that are self-employed, there are people that, I have a guy right now, he makes, he owns like a franchise, so he makes like, deposits like $60,000 or $90,000 a month in deposits. We take the deposits for the last 12 months or 24 months. The more months you show me, the less your rate is.
Okay. Yeah.
So 12 months or 24 months, we take the deposits, we take 50% of that. So if the guy makes $60,000 in deposits, we'll take $30,000 as your income.
Okay.
We also have something like a unique qualifier where the person has no job, but he has a ton of money in the bank. So probably has like $2 million or $1 million. So use the assets to qualify. So it's just showing that you have like say 5 years worth of mortgage payments. So we use that to qualify you as well. Okay. We do have some down payment assistance programs, that within Carnegie, because Carnegie is affiliated with, New Res. So we can close our loans with New Res, but they have some sort of affiliation, so we can look that up. For certain, it goes, basically on where you're living at now.
That's what I'm gonna ask you too. So I've seen some that are based on the town you're moving to. And then some that is based on the town you currently live in. But do you have the ones like, cause I know Essex County has a lot of different ones. And most people may not live in Essex County yet now, but they're gonna move to Essex County.
Yeah, this one I think is where you live at now,
Okay.
and then going from where you live at now, we enter the address and then we see if you qualify.
Okay.
That's a case by case. I haven't done one of those yet.
But nothing is specifically just based on.
No, that isn't yet. That's coming soon though, like the NJFMLA, like I've never done one of those.
Yeah, I know Lakeland has some.
Yeah, they Lakeland has them,
Yeah,
but those,
Union and Essex County.
but the things with those things, that you have to hit certain buckets.
Yeah, no, some of them like based on your job type.
Yeah, you got a job, you, like for the Lakeland, I know you have to be a first time home buyer.
Yeah.
You can't,
And
or
have
not, or have no
something
money,
a year.
and then you have to have, break a certain amount of income.
Mhm.
You have to hit certain, got DTI, so if you don't hit those buckets,
Okay,
then you're not,
so the ones about the town you live in now are not bucket specific?
No,
They're
no.
just- Okay,
you're not buckets, you just have to have like the DTI.
so you could be in that town and move to another town higher in town
Yeah.
and still get.
Yeah. I think they have like, it's like 6 to 8, maybe 10,000,
Okay.
but it's a case by case. We just, with this, I try to look at anybody that I get, I try to look it up and see if it hits, it hits, if it doesn't,
Okay.
I'll let you know. Condos and co-ops, we do those. Warrantable, non-warrantable, if you know the difference. Condos are, between non-warrantable or warrantable, if it's Fannie Mae and Freddie Mac can fund those, okay? Usually what makes a condo non-warrantable is if you have 10 units, right? And 60% of occupied or non-owner occupant, that makes it automatically non-warrantable because it's mostly investors versus owner occupants. Also litigation, if people don't pay their dues, that makes it.
Do you do on spot, like something might have been FHA approved, but now it's just.
Spot approvals.
Yeah, they just let it lapse.
But I've done them personally,
Mhm.
but that takes about 30 days and 40 days, that depends. Yeah, but those are really hard, a lot of.
There's several buildings around here that just let them suckers lapse. Nothing's
No.
going on with the building, they just let them lapse. Like, how did you have it now, so you don't have.
Nah, because they don't, people are lazy, they don't want to homework. You know what I mean? I get it, you know what I mean, but like at the same time, you're making it bad for the
Buyer. And the sellers.
the buyers and the sellers, you know what I mean?
Yeah.
Cause then, they can't sell it because in that situation, and then the buyers can't buy, and then you can't have the turnover, which makes it sucks. Oh, co-ops, everybody knows the difference between co-ops and condos. Co-ops, you have to get, although you may get approved for the condo, you may not get approved for the co-ops. Okay? It's a pain in the ass, and if you wanna knock on the wall with your kitchen, you have to ask for permission. Okay, it's like actually talking to the principal and see if you need.
I
If you
started
can do what you
co-ops
can
in Port Lee, so I'm like, oh.
Yeah.
background.
Well, I used to do co-ops all the time in New York.
Yeah.
And that's, woof, and the co-ops there, woof.
Yeah, here's the thing about co-ops, people see prices and they're like, oh, that's a good deal, I'm like, no,
No, yeah,
can't do the math, you made, and I don't care if you put cash down.
yeah.
If you don't meet the board requirements, you are not getting in, so.
My dad used to be a doorman in New York City on Park Ave.
Okay.
The maintenance fees on those things were like $20,000, $30,000 a month.
That is crazy, people like, utilities included, I don't care, but damn, that is too much money. And most of that's a mortgage to the building,
Yes.
honestly, yeah, I mean, it's a tax write-off, but it's still, you gotta pay that sucker.
Yeah, and you have like big net worth individuals and it, they just, it's like a drop in the bucket for be a
And
condo.
the problem is you got now $20,000, so you got a $240 a year.
Mm.
And you gotta make 4 times that, which means you basically gotta make $1 million a year, so.
Yeah, and you gotta have the reserves.
Clearly, if you pay
You gotta have at
10
least-
grand plus, we need you to get $1 million a year.
Exactly.
Yeah. Yeah, and some of them require reserves, yeah, exactly.
Yeah, it costs them like 2 years.
Uh-huh.
Again, this is the pre-approval thing that we went over just a little bit. Difference between the pre-approval and the pre-qualification, we went over that. Again, these are, keep open communications with the realtor and the lender, okay? A lot of the common issues we have is just, between the appraisals and appraisal. I had something the other day where the appraisal came in, but the underwriter wanted, because they saw like a patch of water in the basement. They just want,
Several months back, yeah.
yeah, they just wanted to comment on the, what is that? You know, because a picture, says 1,000 words, you know what I mean? Sometimes I think just because the appraiser didn't comment, it's just, I mean, again, it's a basement. You know, but sometimes they may want an extra comment and see that to the following day. Luckily, they just wanted like a contractor comment what it was it remediated, is it easy, so on and so forth. That's it. So you gotta have communication straight up. Again, I pick on my phone. Conclusion to recap, conclusion recap, we do loans and I'm trying to make it happen any which way I can. Most importantly, give us a call, let's get started on a couple of them. Okay. And that's it. Any questions?
Now, I know they were saying you're good at renovation loans. What, I know there's 2 or 3K, what else do you got, the conventional renovation loans?
Yeah, it's a home style renovation.
Okay.
I've done a bunch of those. I'm actually trying to help out somebody right now. I'm a realtor. I gave him the option because he's getting the way I'm trying to work it out with him is that we're doing a gift of equity because it's a family member, so he has to come with no money out of pocket.
Okay.
Okay, so and maybe we could even throw in payments inside the loan.
Yeah.
Okay, depending on the situation. Okay, and that's completely up to him.
And then I know there been some changes to the 2 or 3K loans, I think
The amounts, like so before we used to, there were 2 types. There's like a streamline, which is up to 35,000. That streamline is now 75,000.
Oh, shoot, okay.
Yeah, so everything's more expensive.
No, I mean, it was like 29 at one point, so 35, now it's 75. Okay, that's like, I mean, construction is more money, but 75 gives you a nice chunk of change to do.
Yeah, but things are not what they used to.
Yeah.
Things, even the eggs are more expensive now.
That 35 is 75 now, basically.
Yeah, so before, and then that's when you need after that, also, if you're working on structural, you may need a consultant as a third party.
So even if you're under 75, you still may need a consultant.
Depending on what you're doing.
Okay.
Okay. But
not based on permits, just more about what you're doing.
Yeah, what you're doing, just a third party, just to make sure that you cross your I's, dot your T's, make sure everything's done correctly. Okay. You know what I mean? That's pretty much it. Other side of that, you want anything higher, then you're gonna need that, and the guy's gonna come in. Remember, the contractor has to start with their own money. On a streamline, they give you half the money up front.
Okay. So the other one is draw based, completely draw based.
Yeah,
the
draw
one
based.
75, which makes sense. Okay.
Yeah, so you're gonna have to, the first one, they give you half the money up front. So that means you're gonna get like, a draw of like 35,000 right there. Okay, now there've been situations, I heard a story, there's been a couple of stories where like, you gotta know your contractors, right? 'Cause some of these guys just take the money and run. You know what I mean? So you gotta be very careful.
Oh, that's the question. So who's the check written out to? Contractor or homeowner?
In the beginning,
Yeah,
I think it's written out to the contractor.
that's what I know. I had to have my one like that.
So, but that's why.
It should be written out to the homeowner because
But, yeah.
again, they have no incentive.
Yeah.
They get the money.
And no, I think it's done either or. I think it's an agreement. It's done at closing. I think they draw who.
But they do allow you to do it to
Yeah.
homeowners now.
Yeah.
Okay.
But in the beginning of the big one, the contractor has started with his own money.
Yeah, that makes sense.
Has to.
Yeah.
That's the way. And then it gives out in phases.
Okay, yeah.
And so there's been situations where I have given to somebody and in the middle of the job, the guy takes off because he ran out of money. Then we have to switch.
Yeah.
You know what I mean? That's a process in itself.
Yeah.
It happens.
Yeah, hold on.
That's why that's why I always like when I get somebody like a family and they have like little kids. I always tell them to stay away because you have little kids, you're gonna deal with contract, and you're gonna deal with that, and you're gonna deal with your kids when you come, it's gonna be chaos.
Down.
The best.
And then first time buyers are like, be careful, if you got a place to stay, but if you don't, be doing this. Alright, so we'll talk more about the DSCR too. And you can't pull money out of those, can you?
Yeah, you can.
Oh, I need to pay back some stuff on some construction work that was done. Alright, we'll definitely talk about
Yeah, you could pull out.
Yeah, I definitely know I have.
See, I always tell
massive
people,
equity in this property, so.
I always tell people, instead of, like, if you have a property already and you're trying to do construction.
Uh-huh.
Like I did once for a friend of mine years ago,
Mhm.
well, cause. If you do the construction loan, they're controlling your money.
Yeah.
In other words, if you're doing by phases,
Mhm.
if you have the property, cash out of the property, the
Yeah.
100 or whatever it is, then you're in control of the money.
Yeah, the main reason I wanna do this one is because it has rental income for sure to cover whatever the mortgage is, which will probably go down compared to what it is right now. It's definitely income, like, how much do you use the income of it, like, when you do those?
Usually the cash flow of the property, just make sure it
Sorry.
cash flows, so if your mortgage is, if your rental income is like 4,000 and. Your mortgage is 4,000,
Yeah,
then you're
not even
close.
in the ballpark, but the rental income is more than that, so.
Alright, just saying.
Yeah, so like, it shouldn't be a problem, but the cash out thing is good to know, so, okay. Did you tell everybody bye?
Hmm?
Did everybody, everybody?
I don't even know how to bring that other thing up, that other screen.
I think it's just behind it, you minimize this one, right behind it. Alright, maybe not, oh, yeah, it goes in the corner down there, is that in the corner, see the blue bar in the corner, other side? Right there, yeah, that's it, I think that's everybody, nope, that's something different. Just tell everybody goodbye.
Alright, everybody, bye.